Hello everyone. Hope my battery and my headset holds up. Um, but aside from that, first and foremost, I want to thank our veterans out there, uh, past and present. Um, Appreciate everything you do so we can have the freedom to enjoy our weekend. Um, Especially those that gave their lives for our freedom. Appreciate every one of you and thank you for your service. So on to this week slash month watch list. One thing you got to be careful of is coupling. Um, Tomorrow we will open with a new month, a new week, and a new day. They're all going to be coupled together. And for the first hour, the hourly is going to be the 60-minute will also be coupled. Um, After Tuesday morning, the daily will uncouple, but the monthly and weekly will still be coupled until next week. Next, I believe Tuesday morning it'll decouple. So that's when you have the most information. Um, that being said, we have some what I think are pretty good setups here. Um, some are for the monthly. I only scan for the inside month and inside weeks. There are several other setups. If there's other, if you want to scan for potential 2-2 reversals, you want to scan for rev strats, a 1-2. There's plenty of setups out there. I prefer the inside weeks slash inside months. So that's what I scan for. And if I scan and I only have one or two, I'll go scan for something else then. I have several scans set up. You can see here some of my scans I have set up. I have one, two down, 1, 2 down for the 30-minute. And the reason I have these for 30-minute is because some of my, if you look over here, I have some watch list with, that's what these are. Inside bar, 1, 2 down with the hammer on the 30-minute. You need to specify and save a time frame for it to work on here because there's no way to set a time frame in here, at least as far as I know. So you have to set that when you build your scan. So yeah, I have the 1, 2 down with the green month, 1, 2 down with the hammer, the 1, 2 down 30 with the hammer. So I have a whole bunch of them, but mainly what I use here is the inside bar. I just use that. I scan for monthly, run the scan, and there's my results. Um, so there's all kinds of different. This looks kind of funny because I don't see any of the ones that I scanned for some reason, or that I have on my list. So something might be up with this scan. But anyway, I have my list ready. What I have, I'll get rid of this so you have more room to see. Here's my list. I posted it on, I think on Twitter the other day. I just posted what the tickers were that were on my list. And if you look at, I'm looking for them all to go to the upside. They may go to the downside, and any of these can be played either direction. Because they're inside candles, you can play them either direction. If they break the downside, you can play the downside. I just to stay in the best time frame continuity, I like to see them go up. Doesn't mean you can't play them to the downside. And we'll look at those as we pull them up. So let's start with American Airlines. American Airlines, you see that's the weekly, the monthly. We have an inside month. It's close to breaking the top of the month. If we open green, actually futures already open, but that doesn't necessarily mean, yeah, we're slightly red, not too bad. That doesn't mean we'll be red in the morning. This may gap up and gap over this, but either way, we're starting. It's actually a double inside month. We had an inside month for April, an inside month for May. We're close to breaking the top of this month, the top of May already. We do break that. look for our first target to be up here, and then we come down to the weekly, and our first target's here. Second target, there's actually a gap here. So this is just about the same as this. This one was high of 26.11. So I have target one there, 26.09. 26.11 starts that gap. 27.17 fills the gap. The next target's going to be 29.35 and then 30.78. You guys know that, once you start coming up, I'm sure there's a lot of stops set right here. There's going to be a lot of shorts that have stops here. If it breaks this level, they're all going to have to cover, which is going to drive the price higher, which is probably going to fill that gap because it's a fairly tight gap. It's only a little over $1 gap. It's probably going to fill that gap. There may be stops at this level too. Some people set their stops here. Some may set them here, knowing that if this breaks, it's probably going to come to here. Personally, I'd have my stop here, but there probably will be some that set theirs there, so they may trigger also. So that's the American Airlines. Let's take a look back at the monthly again. If it breaks to the downside, you see how far we got to get to break the downside. We got to draw up $4 to break it to the downside. I just don't know that that's going to happen. I mean, I'm not saying it's not going to happen. It very well could happen, but my better scenario for me is to break it to the upside. So your entry is above 24.82, and your targets are 26.09, 27.17, 29.35, and 30.78. That's for me. That's what I'm playing. That's what I'll be looking at. You can, whatever targets you want to take, you can take, however you see fit and what works best for you. eBay, inside again. Again, we're closer to the break in the top than we are the bottom. Doesn't mean we're not going to come down and break the bottom, but I'm looking at it to break the upside. If we break 62.69, the first target 65.11, it's about $2.50 break, $2.50 move. We go to the weekly chart. You see we have an inside week also. Same scenario, your entry could be a break of the inside week, which is 62.14 targets. The first target 62.69. So personally, I'd just wait till it breaks to 62.69 because it has a lot more room to move. That's what I'd be looking for on eBay. Again, it could break to the downside. If it does break the week to the downside, then your targets are going to be here, 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 and here. There's my broadening formation. Drew that. eBay, Google. I probably won't trade this even if it does trigger. I don't like all the gaps on it. The weekly chart's not too bad. The monthly isn't even too bad, but look at the daily chart. Look at all these gaps that we have. It wasn't too bad back here, but look at lately. Here we closed here. We gapped up to here. We closed here, gapped down to here. We closed here, gapped up to here. Even though it's a 2 down, we still gapped up because we closed here and opened here. We closed here, opened here. Closed here, opened here. There's just a lot of gaps. And I understand you're going to have gaps overnight, but some of these are pretty big gaps. Your close here was 351.93. Your open was 291, or I'm sorry, your open was 328. So you went from close was 51, and your open was 28. $23 gap. That's just a little bit scary for me on a stock of this price. That not necessarily a stock this price, but the options contracts. This could easily be you play this wrong. That could be a $300-$400 loss overnight. I'm not into that, so I probably wouldn't trade this anyway. We'll see. I may, because it is a monthly, I may buy something way far out. However, if I buy something that far out, I'm probably looking at $4,000 or $5,000 per contract, and I don't like that. Um, so I probably won't trade this anyway, but I'm putting it out there in case anybody's interested in it. You see we have an inside on the month. Uh, it's a momentum hammer. So if we break the upside at 2389.05, come down to the weekly chart, look for targets. We have a target here, which is the high at 2431. So you're looking at a $40 move for target one. And I go back to the monthly, I'm looking at the measured move. And these are pretty accurate. If you're conservative, you look at 92, the bottom of the candle, the bottom of the body. I don't use the wicks. $90 to $53, so $60 body. Your entry is $23.89. Add 60 to that, puts you at $24.50. And that's it's not guaranteed, but it's very common. So look for that move, $60 measured move on a break of this for the inside month. Again, we could break it to the downside. However, we have to drop 200 and I don't know, 200 or $160 or something to be able to break that. Not saying it won't happen. It just looks more to me like the momentum's to the upside on this. Weekly chart, you see we had a 2-2 and then we had an inside candle and then a 2 up. So we had a 2-1-2 reversal here. That's another bullish signal there. So that's for Google. Microsoft is the next one I have for the monthly. Microsoft, go to the month, inside month, hammer candle, momentum hammer. As you know, the hammer is closer to breaking the top side than the bottom side. So a break of 254.35, targets 263.19. You're looking at almost $9 move there. Go back to the weekly chart. You see we have another 2-1-2 reversal on here. So that's not to say we couldn't end up with a rev trap. We could end up with a 1-2 down on the weekly. So anything you get in, just make sure you keep tight stops and stick to them. What's going to kill you, kill your account, is saying, okay, I'm going to get in on a break here, and I'm going to put my stop maybe right here, about halfway the candle, which would be the close of this candle. I'm going to put my stop here, and then it comes down to there, and you say, well, let me go a little bit further to here, and then it gets there, and then you say, well, let me go back, let me go down here a little bit further. Next thing you know, you're way down here, and you still haven't stopped out. That's what kills your accounts, and that's all about discipline. That's not about learning how to read charts. That's not about knowing how to trade. That's not about knowing how to trade options. That's all psychological. You need to be disciplined enough to stick to your stops. That is the key. So that's Microsoft. SBUX is the last one we have here for the monthly chart. SBUX, same thing. Momentum hammer, break above 116.74. We go to the weekly chart. We have a 2-2-2 reversal on the weekly, so the weekly's looking good to the upside. You break this high of May. Your first target is 117.25. Not a very big target. Shouldn't be too hard to take that out. Next one's gonna be 118.98, and then that's gonna be an all-time high. I believe that's all-time high. So from there, you just look for a reversal on the daily maybe. There's different ways to look for stop outs. You can use a reversal on the daily. You can look for maybe a break below the close of the previous day. Whatever works for you. Caterpillar. Let's go to the weeklies now. Caterpillar weekly chart. Now, anything that I trade on the monthly chart here, I'm probably going to be looking at July, maybe August expiration, monthly expirations. If I enter any of these, I'm probably going to be holding them at least a week or two. It depends. I mean, I've bought them before and they've shot way up, and I've been up 50% after 2 days, and I've sold it, closed it. So it's possible that you could only be in it a day or two, or even same day. But I'm probably going to be in these a week or two. So I'm going to buy, and because of the volatility we have, not the volatility, but the indecisiveness we have right now in the market, I'm going to make sure I buy myself some time. I'm gonna limit how much I can potentially make, but I'm also going to limit how much I can potentially lose. I may only make 30% on this in 2 weeks, but I know I'm not going to lose 50% overnight. So that's kind of my outlook and how I look at things. So I'm probably going to be looking at, I'll have to see how much the premiums are and see how much volume there is. But anything I buy on the monthly chart, I'm probably going to be buying at least July expirations, at a minimum July expirations, maybe August. So let's go back to the weekly charts again. Caterpillar, we have an inside week here on Caterpillar. The month, we have a 2 up on the month we had an inside on April. If we go to the year, killer year so far. Quarter, pretty good quarter. We had a killer quarter here, pretty good quarter here, still 2 up. Still have another month left in the quarter. We go to monthly. We had a 2-1-2 continuation. Nice monthly chart. Nothing looks negative on it. Weekly chart, yeah, we see a little bit of weakness here. That may just be some profit taking. But you see, we had less and less volume on each week. I would look for a 2-1-2 reversal here. Look for it to break the upside. Now you can look at it if you go back to this may be an old broadening formation. Yeah, I think this is an old broadening formation that I just never deleted because it doesn't fit any charts here. So let me get rid of that. If you do clear drawing set, it's going to get rid of all my targets and stuff too. So I don't want to do clear drawing set. That's why I'm doing remove drawing. Clear drawing set will take away, as far as I know, it takes away everything that you have drawn on there. So I don't want to do that. I've made that mistake before. So broadening formation on here on a weekly, you probably look at something like this. Probably look at something like that on the weekly chart. Daily chart. Yeah, there's what you're looking at for the daily chart. You see we had a gap here. We filled that gap. And these indicate gaps. These little spikes. You see we had a gap here. On this one we had a gap right here. I have it programmed in. I created this myself. Anything that has more than 1 cent difference between the open and close will put a spike here, put an alert signal here. It's just an easier way to point out gaps. I don't use them as much as I used to. I used to trade gaps a little bit more. I don't really do it now as much, but probably because I was focusing on just a couple of strat things. I'm slowly adding more stuff to it now. So we go back to the weekly. You see inside week, break to the upside. The all-time highs here is going to be target 1. We don't really have a target 2. So what you might want to do, actually we have a target 1 right here, a target 2 here. They're only, what is there, 20-some cents, 27 cents between them. So if it hits this one, it's probably going to hit this one. But again, what you can do on here is look for a reversal. If we go back here, let's pretend none of this is here, and we have this. and you jump in when we broke this one. Let's just say you jumped in here and we broke this one. The next day you have this. Well, now you have a shooting star with a gap. Um, this maybe your um, maybe an indication you might be looking to pull back a little bit. I think at this point I probably would have been out when I saw this shooting star, because look what happened. If you entered here, you just gave up all your profits if you held that overnight. You could have got it back if you held and rode it up to here, but most likely you would have stopped out as soon as the market opened, being down that far. So that's Caterpillar weekly. Again, break above the inside candle. The monthly chart we talked about, it's bullish. Don't see any reason to say that it's going to go, come back down. So that's what I'm looking at for there on the weekly. Lows is another one. Lows, another inside, but I like this one. I like this one because we have more room to move to the upside. You could do a broadening formation like this. Bring it back to here. There's your broadening formation. Is this? See a low 186.38, 186.70. So yeah, that is. That line doesn't look that low. 186.38, 186.70. So I guess this one is lower. So that would be your broadening formation. You bounce right off the bottom here. This one would be one of my favorite setups. I'd look for a break to the upside. You break this to the upside. Remember the measured move, 192.30 to 197.60. You're looking at $5.40 roughly. Your entry is here at 197.84. Add 5, about 203 something would be a measured move target. But aside from that, you drop back to the weekly, and I wouldn't say, here's your entry. Target 1's right here. It's very tight. I'm sure it'll break that. But your entry's here. Target 1, you don't want to have target 1 be $20 away way up here. That's just too much to look for. Drop down to the daily chart, and okay. Drop down to the daily chart. Look here. Your entry's here. This is the next high. You take out these stops here. Your next one is up here. You take out these stops here. And you may have some in between if you look at the 60s. If you look at the 60s, it's not. You gotta go way down here. Yeah, it's not even showing up on here. Because I guess if you go back far enough, you could put another target here, another target here, and then you have this big red candle that there's no pivots from here to here. So if we break this, if we break the 199.46, obviously 200 is going to be a psychological. We break that, I'm going to guess we're hitting 202 pretty easily. So back to the weekly. I like this. There's room. It came off the bottom of the broadening formation. We have room to ride it all the way back to the top. See how it goes. I'm too conservative, so I'm probably not going to ride it that high, but it's there. Look at the daily again for the targets. Target here, target here, target here, target here. All these pivots. Here, here. There's one here. I didn't put it in here because it was so tight to this one. So then you have one here and you have one here. Obviously you have this one up here. Will we break all these in 1 week? I wouldn't think so. You're looking for a $20 move, which is over 10%. I'm not saying it won't happen, but that's quite a bit to ask for 1 week. So make sure you keep your stops, keep moving your stops up, set your stops strategically. I don't like saying okay 10% stop. Look for a strategic stop. Let's say for instance you got in. Let's say you got in right here. Rev strat 122. Actually, that's a 123. But let's say you got him right here. You broke above this. Your target would be, first target would be here. You broke it. You broke it. At this point, I'd probably put my stop right here at the bottom of this candle. Now we got this candle. It's not looking real pretty. I'd probably move my stop to right here. Next day, I would have stopped out. Still would have made money, but I don't want to say, okay, I'm going to use a 10% stop. I want to use my stop strategically, not based on a percentage. So there's Lowe's. Walmart, I really like Walmart also. Weekly chart on Walmart, it's inside. If we look back here, go to monthly, we're set up bullish on the monthly with 222 up. Keeps going. We break this 2 up, it'll just about break. Actually, if we break this 2 up, we'd already be in it because the inside week up is a little bit lower. It's at 143.68. 90 cents higher would break the previous month high. So we look here, stepping up, kind of consolidated a little bit here. If I'm going to draw a broadening formation, I'm probably going to look at something like this. Probably going to look at something like that on a broadening formation. Yeah, we're near the top of it, but if we move out to here and it takes 3 or 4 days, daily chart, if it takes us 3 or 4 days to get there, our entry is going to be here. By the time we get there, the broadening formation may be at 147. So we're looking at a over $3 move, almost $4 move. So I like it for that reason. Back to the weekly, we have a 2 down, or 2 up, 2 down, 2 up. So we had a 222 reversal followed by an inside week. Looking for a break above the inside week, and again we came down. Actually, these targets are directly from the weekly chart. Target high here, target high here. This one's real close to this one. Target high here. You can come down to the daily chart if you want to set some more conservative targets. You might be able to find someone here. Go down to the daily, entries here, target here, and what do you know? Is that a gap fill? High is 144.58. Low is 144.50. So no, that's not a gap fill. It's already filled. It was filled right here. So no gap to fill there. So target 1 here, but look at this. Target 2. You have a huge green candle. Target 2 is the top of that. If you break this, there's a good chance you're going to shoot up to this one. You can come back, like I said before, you can look at the 60, and you can see where maybe you could find smaller targets in there. I can't even go back far enough to get it. I mean, I could if I change my parameters, but you get the point. So target 2 here, target 3 here, target 4 would be up here. So that's my watch list. Anything I trade on the weeklies, I'm probably going to be buying at least June expiration, June monthly expiration. So that would be June, what is it, June 17th, June 18th. I'd be looking at June 18th expiration. I might be looking at, you see we have 26,000 open interest. Friday we had 2,400 on the volume. Looks like this 145 is getting a lot of attention. You see it's 80 cents by 84 cents. We have to move up about 142.03, about $1.50 to set our trigger, and by then this 80 by 84 maybe $1 by $1.05. Still pretty cheap options. So you could go in here and buy 1 or 2 contracts and then keep adding to them. It depends on how you want to trade it. You could buy, since they're so cheap, if you're, depends on your account size, your risk tolerance. You may want to go in and buy 5 or 10 right away and maybe add to them as you go. And if you were to add, let's say you got in right here on this 212. You got in here and you have no reason to get out here. Yeah, you had a reversal here on the weekly. You may get out here. No, well, actually, I don't want to be looking at the weekly. Let's look at the daily because I'm going to enter on the weekly. Let's say you got in right here, 222 reversal. You get in right here, ride this up, come up. You have an inside followed by a 2 up. You may have wanted to add right here. Yeah, it might not have been the best move to add here, but that would be a place you would add. Now it would come down, depending on where your stop is, you probably would have got stopped out here. This isn't the best example because it didn't really follow through, but I'm just showing you where you could have added. Let's go back to the weekly and see where there would have been an entry. You'd probably find something. Let's look at Lowe's. I know they had a pretty big run. Looking at the weekly on Lowe's, let's say you wanted to enter right here on the 22nd. It's actually, yeah, the week of the 22nd. You wanted to add on the break, so you would have been adding or buying on the 29th. Let's say you wanted to buy in on the 29th. Come down to the daily. Let's find the 29th on the daily. It was back here. It was September 29th. So you would have got in about here, right about on this candle. Probably when it broke right above this one. Actually, we can check our weekly and see what the break would have been to enter. I think it was right here. Yeah, 622. So break above 136.71 on the 29th. Come back to the daily. 29th was right here. So what did I say? 136.71. That must have been 163.71. I forget now, but anyway, just for sake of time. So you entered right about here on the 29th on this candle. You come up, 2 up, 2 up. You have a 2 down, but you still finished green. It gapped down and shot back up. So you're still in it. You're still in it. You had a 3 here. Maybe your stop was below this candle. You didn't trigger it, so you stayed in. Now you're going to look. Now you had this break above this 3 candle. That would be another. You could add right here, buy another contract. Same thing here. You got in, right here, break above this. You could have bought another contract. By this time, your average might be here. So maybe set your stop at break even on your average. You would have never. I'm not saying you wouldn't have. I'd have to sit and figure it out. I don't know what the options contracts were going for. But let's say your break even was right here and you set your stop to break even. You would have never triggered it. You're still in it. Now you come way up here. Now on the daily you have a shooter. Yeah, it's green, but it's still a shooter. And then you broke below that shooter right here. There's your exit. By now, if you only bought 1 contract at a time, you had 3 contracts by the time you got up here. When you got in back here, you only bought 1 contract. If this doesn't work and you set your stop here, you only got stopped out on 1 contract. What's that going to cost you? Maybe 50 to 100 bucks on a contract that's a couple weeks out. Might cost you 100 bucks. Where on this run, if you kept adding to it, you might have made $600-700. So you're going to $600 reward versus $100 risk. Just different strategies, and you have to give credit where it's due. That's something that Big O Trades is that he's been teaching, and I've been trying to implement that. You can find Big O Trades on Twitter. I think that's his handle, at Big O Trades. But that's something he does. He buys 1 contract, and once let's say he buys right, right here. I think usually what he does is once he breaks here, he buys 1 contract. Once this breaks here, he'll buy 5 contracts. And then once he comes up and maybe breaks here, he'll buy 5 more. Every time he adds, he buys 5 contracts. So when it's done, he might have 20, 30 contracts. But if it doesn't work and he stops out, he only has that one contract that he has to stop out on. So just another strategy to consider. All right, this video has been long enough. I don't want to bore you guys enough. I want you guys to watch the whole video. I don't want you to just, see, oh no, 30-minute video. I'm only going to watch the first 5 minutes or the last 5 minutes. I think there's a lot to learn here. Here's my watch list for this week. If you like what I'm putting on here, like it, subscribe to it. That lets me know. People can watch it. That doesn't mean it doesn't let me know that you guys like it and want more. So, like it and subscribe, and that lets me know that, hey, I want to see more of this. So thanks for watching, and have a good week, everyone. Be safe. Thanks. Bye.